Hello, you guys. How you guys doing? Let me get ready. Let me get ready. There you go. You're the first one. What's up, Marcus? Can you hear me, bro? Can you hear me? Let me know. Let me know, please. Let me know, Marcus, if you can hear me breathing. Can you guys hear me? Can you guys hear me? Please let me know if you guys could hear me. Can you guys hear me? Can you guys hear me? Nice. There you go, bro. Nice, bro. There you go. Make that happen, bro. Awesome, awesome. All right, you guys, I'm just going to give it about a couple more minutes. A couple more minutes. All right, I'm trying to let some more people get in. Okay, a couple more minutes. Just let some more people get in. All right, give me a second. Give me a second. Just give me a couple more minutes, you guys. I'm going to let some more people get in. All right. Just going to let some more people get in. Thank you, Johnny. Thank you. I appreciate it, bro. Just give it a couple more minutes. Let some people get in. This is going to be a very important lesson that I'm going to do today. A lot of my students already know this lesson, but I want to teach this to a lot of people that don't know this lesson, be able to help you guys out and be able to help you guys become more profitable, more consistent when it comes to trading the stock market. All right, you guys, just give me a couple more minutes. Let some more people get in the call. All right. Awesome, awesome. What's up, Louise? You guys get ready, get ready. We're just going to give it a couple more minutes. I appreciate it if you guys could give it a thumbs up too. Or if you get something out of this lesson, give me a thumbs up. Tell me that you got something that was worth my time. All right, you guys. Awesome, you guys. I'm just giving it a couple more minutes. A couple more minutes, you guys. Okay, about 2 or 3 more minutes and we're going to get started. Okay, you guys? 2 or 3 more minutes and we're going to get started here real soon. Make sure you guys get your notepads together. All right. Get ready to take some notes because you're going to learn some really valuable lessons today. I have to read the chart indicators, which is a very important lesson, you guys. All right, you guys, we got about a minute left before we get started. I'm about to get started here in a matter of a minute. All right, you guys. So let's do this, you guys. Let's do this. If you guys could do your best, try to save all your questions to the end. Okay. Awesome, you guys. Awesome. You guys could save all the questions to the end, you guys. I will really appreciate it. Because I'm about to go through this lesson, and this lesson is gonna take me several minutes to be able to go through the lesson. So just please save all the questions to the end, you guys. After we are done, I will go back, or you guys could bring up the questions to see what you guys have in mind. And let me know, you guys. All right, take some notes. Let's get ready. Let's do this. Okay, you guys. Awesome. So let's do this, team. Let's do this. So today, look, I'm about to make this lesson today about the charts, about how to read a chart the correct way, the right way that you'll be able to benefit from it and be able to understand every indicator, what it does, what it means, and how it benefits the chart, and how it could benefit you as well. Okay, you guys, so we're gonna start, for example, with AWX. It's a very good simple chart, especially it was playing out the past couple days here in the market. Okay, you guys, so I want to go over this chart, okay, you guys, and I'm going to go over every single little indicator, every single little thing that's in this chart, okay, you guys, and I'm going to start from the top left, working my way down towards the right, or from the top left, working my way towards the right, working my way down. So as you can see in the top left, you guys, it says AWX. That is basically the ticker symbol. After that, it says in black 10.25. That is the price. After that, it says plus 4.58. After that, it says plus 80.14% that it has moved. Okay, which is not bad. Okay, that's very good. And below AWX, as you can see, I'm starting from the left to the right, going a straight line from the left to the right. Below AWX, it says the date, and the date is 2018, 07, 27 at 1 p.m. Okay, then all the way on the right, it says 0.6. No, sorry, but this is 0.35. O stands for opening. Okay, that's the price that are open. Next to that has the H. H stands for high, 11.21. That is the highest that it went while the market was open. The L stands for low at 5.51. What's up, Adric? How's it going, bro? The L stands for low at 5.52. The C stands for current price at 10.21. And the V stands for volume. The volume is 11.64 million. That's what the stock went supernova, okay? And as you can see right there at the volume at 13.64 million, at volume at 13.64 million on the right, on the top right corner, there's an X. So now that column right there with the X is at, if you go down there, it says number 10, number 8, number 6, number 4, number 2. As you can see, that column on the right coming down from 10 all the way down to 2, that column, we call it an increment, okay? That increment, that column lets you know how much increments does this stock move. As you can see, this stock at the 5-day chart moves in a $2 increment. So as you can see at the 5-day chart, it went 1 increment, 2 increments, 3 increments, 4 increments, 5 increments. 5 increments during the open market. And if I was correct, they went all the way up to like $19. So it went up another 3-4 increments after hours. So as you can see, it's an increment of $2 per increment. Every stock has a different increment. The smaller the increment, the more riskier the stock is. Me personally, I try to stay away from stocks that are smaller than 5 cents an increment. Okay, because the smaller the increment, the more dangerous the stock is. And the smaller the increment, the more of a micro penny stock it becomes. And me personally, I don't like trading micro penny stocks. I like to stay above $1. Okay, so again, every stock has a different increment, you guys. The bigger increment, the faster and the more the stock will swing up and down, moving up and down within increments. All right, now let's go all the way to the top left, you guys. All the way to the top left when it says AWP. Now let's move a little bit down. It says AWX. Now let's move a little bit down when it says AWX 5-day. And it says from July 23rd to July 27th, it has gone $7.88. That equals out to 358.18% that it has moved in 5 days. But of course, yesterday after hours, it moved way more than that. So we're talking about a little bit over 400% move in a 5-day chart, which is phenomenal. This is the reason why we love penny stocks, all the way from $2 and some change all the way up to almost 20 bucks, $19, you guys. Okay, now below that, as you can see, it says the SMA 10. Okay, the SMA 10, you guys, is this purple or this pink line that runs with the chart. As you guys can see, this purple or pink line, wherever you want to call it, I think it's purple, that runs with the chart. That is the SMA 10. Okay, SMA stands for simple moving average. Okay, now below the SMA 10, there's a SMA 30. That is the green line. The SMA 30 is the green line that runs with the SMA 10. Okay, the SMA 10 is a positive trend line. When she is below the chart, she will continue trending up as long as she stays above the SMA 30. Okay, now the SMA 30 is a negative line. As long as she stays above the chart will continue to trend down as long as the SMA 10 stays below the SMA 30. So that's a good way to be able to identify if the stock is going up or if the stock is coming down. Be able to identify if it's trending up or it's trending down just by looking at the SMA 10 or the SMA 30 to see which one's leading the way, the bears or the bulls. Okay, you guys? Now below the SMA 30, we go all the way to like in the bottom of the middle of the chart. There is volume. Volume are these candles that are right here on the bottom in one straight line. They're sitting right here in the bottom. They kind of look like little skyscrapers, little buildings. Like if you're in New York City, for example. And as you can see right here, big long volume candle. This big long volume candle, as you can see right here, this candle had 1.27 million in volume. You see that? Okay, now this one, for example, right here had 1.58 million in volume. That's a lot. You see that, you guys? This candle right here had 985.42 thousand in volume. So these are very heavy volumes, you know, and that's why, as you can see, the candles are green. So they're heavy volumes of people buying it, holding the stock, which increases the volume and keeps trending up, keeping it at a positive trend, forcing it to continue to go up, because there is a lot of heavy volume compared to the negative red volume of being shorted or being sold. You see that there is very less of that, especially after hours. As you notice, more was coming in, more heavy green volume was coming in, so more of it was being bought before the market closed. You see what I'm saying? That's why after market, you notice it continued to skyscrape, continue to go. Okay, you guys, so the volume is very important, you guys, and we're going to get into that in a minute as well. First, I want to go over all indicators that I use and how I put them together. So the next indicator I want to talk about is the SMA 26,12 right here in the bottom. The SMA D 26,12. Sorry, you guys. I just woke up not so long ago. I had a long night. You know how it is. Okay, so the SMA D 26,12, you guys. As you guys could see right there, that's how I have it set up. The SMA, sorry about that, the MACD, I just got a text, it kind of distracted me. I'm talking about the MACD, okay? Sorry, forget about the SMA, I'm talking about the MACD. On the MACD 26,12, as you guys could see that it's a red line, okay? It's a red line, it has a red color, it's a red line, okay? Now there's a single line. And this signal is a buying selling signal. That's the blue line that runs with the MAC signal. Then below that is something called divergence. Divergence are these light purple bars that sit in one line and they have bars coming up or they have bars coming down. Okay, so again, the MACD is a red line that trends from the beginning all the way to the end of the chart. That is the MACD, is that red line. Now the buying and selling signal is that blue line that runs with the MAC signal all the way from the beginning to the end of the chart with it. Now the diversions, again, are those purple bars that sit at the middle of the chart. They have little bellies, little bars going up or little bars coming down. Okay, so again, that's the MAC signal, the buying and selling signal, the blue line, and the diversion, those bars that sit in one line and they have bellies coming up or have bellies coming down. That is very important, okay, you guys? Very important. So let's talk about that for a little bit. Let me get into those details. This is what you guys got to put very close attention, because the MAC signal is the queen of the chart, and this is how I will explain it. How is she the queen of the chart? So as you guys could see right here, you guys, okay, the MAC signal right here, as you can see, she is above the diversion, okay? and she starts to work her way up above the diversion, above the blue signal. Okay, then she draws below the blue signal, and then she pops above the blue signal, and she draws below the blue signal. Then again, she pops above the blue signal, and this time when she pops above the blue signal, she starts to work her way up, working her way up. Remember, we're talking about the MACD signal only, working her way up above the blue signal, above the divergence. Because remember, the divergence are these bars in the middle where these triangles are sitting at. These red and green triangles are sitting at. That's the divergence. So as you can see, she's opening up above the blue signal, above the divergence, working her way up, working her way up, working her way up. Then right here, she draws below the blue signal. Okay? So as you can see, at the divergence, there are triangles. There are red and green triangles. A red triangle is a selling signal, basically telling you the MACD signal drop below the blue signal, and it gives you a selling signal telling you to sell. Okay? Now, a green signal is a buying signal. Okay? A buying signal is when the MACD signal crosses over the blue signal. Okay? Above the blue signal is telling you to buy. And the reason it's telling you to buy because it's telling you that it's predicting the chart is going up. When it's telling you to sell, because it's predicting the chart is going down. Okay, you guys? So let's go over this again. Okay, now let's start from the beginning. As you can see the beginning right here, as you guys could see, you guys, the MACD signal is below the MACD signal is above the blue signal, below the divergence. As it works her way up to the diversion, you see there is no price movement. There is no price movement. None at all. As you notice right here, it starts to crack over the diversion. Okay? As soon as she cracks over the diversion, you see this? As soon as she cracks over the diversion, we got volume coming in. The first candle right here of volume coming in. You see that? And as soon as she crosses over the diversion, MACD signal over the blue signal, we start getting more volume. And as you notice, we start to get more volume because the MACD signal now is crossing over the crossing over the diversion on the other side, on the top of the diversion, and at the same time the volume is coming in. Okay? As the volume is coming in, as you notice, the MACD signal is over the blue signal, over the diversion. Then you notice right here, the MACD signal got a selling signal because the MACD signal dropped below the blue signal, but still above the diversion. Okay. Then you notice right here, she reversed. Okay. And she went above the blue signal again, but still above the diversion, which is very important. Then right here, she started to opening up again above the blue signal, above the diversion. She started to open up, And as you notice, when she started to open up, the chart went higher as the MACD signal went above the blue signal. Then right here, as you notice, we get another selling signal because now the MACD signal dropped below the blue signal, but still above the diversion. As she is holding price, she's holding above the diversion. As you notice right here, it's another buy signal picking up the MACD signal again above the diversion. She crosses over the blue signal again. So now the MACD signal is above the diversion. Now right here, you get another selling triangle because again now the MACD signal dropped below the blue signal. Okay, when she dropped below the blue signal, as you notice, the MACD signal now is below the blue signal, working her way up to the divergence, but she reversed and broke again above the blue signal, above the divergence, giving you another buying signal. Okay, as you notice, she started to go up again above the blue signal, working her way up, working her way up, working her way up, working her way up. Then right here, she crossed below the blue signal. When she crossed below the blue signal, she's again above the divergence, but below the blue signal. Okay, you guys? And so on and so on and so on. So my point is this, okay? What I'm trying to tell you is this. It's very important what I'm about to say right now. As long as the MACD signal stays above the diversion, okay? Remember the diversion of those purple bars, right? Above the diversion, as long as the MACD signal stays above the diversion, the chart will continue to trend up. Okay, the diversion is the price volume. The diversion controls the price to increase or to decrease according to how the MACD signal is trending through the diversion. Okay, so this is very important to know this because as you can notice right here, one day 2-day, 3-day, okay? So again, 1-day, 2-day, 3-day, the MACD signal stayed above the diversion the whole time. So if the MACD signal stays above the diversion, the price will continue to increase 70% of the time. If the MACD signals above the blue signal, above the diversion, the price will increase 70% of the time. Don't forget that if the MACD signal is above the diversion, above the blue signal, the price will continue to increase 70% of the time. Now, if the MACD signal is below the blue signal, but still above the diversion, the price will hold 70% of the time and will continue to increase 30% of the time. So as long as the MACD signal stays above the diversion, you are in good hands. That's what I'm trying to say. The chart will continue to grow. So then you will know to continue to hold the stock, because the stock will continue to trend up as long as the MACD signal stays above the diversion. Do you guys understand that? So you guys can see right here, MACD signal cross over the diversion. Look at that. The price starting to increase. Look at that. 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 See that? As long as she stayed above the diversion, she never dropped below the diversion. 1 day, 2 days, 3 days, she never dropped below the diversion. Never. So as long as the MACD signal stays above the diversion, doesn't matter if she is below the blue signal, the price will continue to go up. As soon as the MACD signal crosses below the diversion, like it did right here, the chart will drop below the SMA 10, and now the SMA 30 will be in control. Basically, the bears. As you guys could see, it did yesterday on Friday. The MACD signal dropped below the diversion. Okay. So now another thing that I want to teach you guys too is right here, okay? Sometimes my students tell me, okay, well, when should I sell it, Fidel? And I tell them, well, look, good question. I think you should sell it as long as she starts to go sideways. You see that? She started to go sideways right here. You see that? And again, the MACD signal is below the blue signal, but still above the diversion. That's why the price holds. Remember, I taught you guys a couple minutes ago. As long as the MACD signal stays above the diversion, the price will stay increasing. As long as the MACD signal stays above the diversion, the price will keep increasing. Now, if the MACD signal is above the diversion but below the blue signal, okay, the price will hold 70% of the time. It will hold. As soon as she gets close to the diversion, it's about to drop below diversion. Like where I'm at right here, the chart will drop. Bah! And there she goes. You see that? It drops immediately. It drops real fast. And the reason is because she dropped below diversion. Okay, so as soon as she dropped below diversion, the chart will drop. Okay, if the MACD signal is below diversion, you guys, the bears are in control. If the MACD signal is above diversion, the bulls are in control. So as you notice, she dropped and she reversed real fast. As soon as she reversed, she crossed over the blue signal, still below the diversion, trying to work her way up. And boom, right here, she cracked over diversion. As soon as she cracked diversion, she continued trending up, team. You see that? Because she cracked over the diversion, okay? So again, what I'm about to say right now is very important. Make sure you guys take some notes, okay, team? So this is the important thing, okay? As long as the MACD signal is above the blue signal, above the diversion, the price will continue to increase 70% of the time. Now, if the MACD signal is above the diversion, but below the blue signal, like right here, for example, below the blue signal, the price will hold 70% of the time. And it will increase 30% of the time. You see, that's why there's a hold here. You see, the price don't drop. Okay? Now, if the MACD signal is below the blue signal, below the divergence, the price will drop drastically. 70% drop, 70% of the time. Now, if the MACD signal is above the blue signal but below the diversion, the price will increase 30% of the time, and it will hold 70% of the time. You see what I'm saying? So the point is, you guys, that I'm trying to give you again, it's all about how the MACD signal trends through the diversion. Will design the chart for you. Okay, you guys, that is very important. Now let's talk about the RSI, you guys. The RSI 14, as you can see, are this bottom line all the way, all the last line in the bottom of the chart. Okay, as you can see right there. Okay, it starts right here at the bottom, right at the 50. You see how it says 50? The RSI says 50. You see that? You always want to be around 50, you guys. You always want to buy in around 50. Okay, you never want to buy in around 70. See, right now it's giving me 73, 69. Right here is giving me 80. See that? It's 80 levels. You don't want to buy up there. This is too high for you. Okay, you guys? So the RSI, I use it as an indicator to let me know if the stock is cheap for me to purchase, or the stocks are expensive for me to purchase. And it lets me know how cheap it is and how expensive it is, because I don't want to buy something that is not in season. Like, for example, let's say a fruit or a vegetable. When it's not in season, sometimes they're a little bit harder to find and it will cost you a little bit more, right? For example, I live right here in the Central Valley of California, right? Right here in the Central Valley, corn, right, when it's not in season, every corn will cost you about $1.50 for a corn. You see what I'm saying? Now, when corn's in season, it will cost you about 10 cents. You see what I'm saying? So that's what I use the RSI for, okay, you guys? So that's the beautiful thing about the RSI. But now let's go back up here to the MACD signal, you guys. So now as you can see, as in the MACD signal, you guys, again, we have the red and green triangles. Again, the red triangles, you guys, that triangle right there is a selling signal. So when the triangle comes on, it lets in its red, it lets you know that selling is going on. Selling is happening already. Sometimes the selling, as you can see, could be very light. That will not hurt you because you are above the diversion. You see what I'm saying? Now, as you can see, the next triangle right here, it's a buying triangle. Okay, that lets you know to buy the stock, because the stock now is going to start trending up because the MACD signal crossed over the blue signal. So it's a buying signal telling you to buy it. When that triangle comes on, the buying's already going on. So again, when these triangles come on, it's already happening. It's already going on. Okay, so that's a very good example right there. Okay, you guys. So now I want to teach you guys this right here. Sometimes when I teach my students this, is, for example, they get in, right, because the MACD signal is over the blue signal, then they get a selling signal. And they're like, fuck, I'm going to sell my stock because I got a selling signal. And guess what? They sell the stock, right? Boom. Then 2 or 3, 5 minutes, 10 minutes later, you get a buying signal telling you to buy the stock. Okay? And you're like, man, but I just stole the stock, man. And now telling me to buy it, like, man, that cost me a day trade. You see what I'm saying? So then I tell my student, there's no need for you to sell it. And they tell me, why? Because look, the MACD signal is over the diversion. As long as the MACD signal stays over the diversion, you are in good hands. Now, if the MACD signal gives you a selling indicator, okay, give me a second, I'm trying to find a good one. Now, the MACD signal gives you a selling indicator, like right here, okay, it tells you to sell, all right? And you're like, okay, it's giving me a selling indicator. Let me hold it because I'm way above the diversion, okay? Now, it's giving me a selling signal, and I'm way above the diversion, so I want to see how far the MACD signal is going to go below the diversion, because there could be a possibility that she will reverse and continue trending up. But if she doesn't reverse, you have to see how far is she going. How far is she going? As you notice, now she starts to get close. Hey, what's up, bro? How's it going? As you know, she starts to get close to the diversion. When she starts to get close to the diversion, you guys, that's when you want to sell it, because you don't want the MACD signal to cross below the diversion. Because as soon as she crosses below the diversion, you guys, she will start to drop, and you want to lock in your profit before she drops. You see what I'm saying, you guys? So that's a good indicator of when to sell, okay, you guys? Another good indicator when to sell is when the MACD signal is going sideways. Okay, when the MACD signal is going sideways for a good period of time, it's a good indicator that she maybe will drop afterwards and you want to lock in your profit. Okay, you guys? So now let's look at this chart, okay? Let's look at the chart, for example. Me personally, let's look at buying and selling opportunities, okay? Me personally, as soon as I notice this is going on right here, I will not buy this shit. This is nothing right here. It's not telling me nothing. There's no volume there. They won't buy nothing there. As soon as you notice a MACD signal starts to open up right here, above the diversion, which is a good sign, you know, this is what I buy. This is, I hope you guys are here. I hope you guys are taking notes. This is what I buy. This is what makes me take 10, 15, 20, 100% like I took from this stock yesterday. All right. And one day on a swing trade is buying right here. Right here. MACD signals over blue signal. Right? Over the diversions. It tells me buy. So then I buy it. Okay. When I buy it, you guys, it starts to trend up. As you notice, the chart starts to go up. 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 Now it goes sideways right here. I get a little bit scared. Okay, because she is way the fuck up here and she's way above the diversion. Now she starts to drop. And when she starts to drop right here, I have two choices, you guys. One is to lock in my profit because I bought it down here. Okay, or continue to hold it and risk how far she's going to drop. And hopefully she stays above the diversion. Okay, so you have a choice to sell it, lock it in. If not, you want a big boss like me, keep holding it. And as you notice, let's see how far she will drop. Hopefully she stays above the diversions, and boom, she bounces right here above the diversions, continues to go up. You see that? Boom, a bounce above the blue signal, continues to go up, drops below the blue signal. Now working her way down towards the diversions again, right here, a little bit scared again, ready to sell it just in case she drops below diversions. She doesn't. Boom, she bounces back up. Then she goes all the way up here. Oh, something up here. I'm top of the world right now. You see that? And I bought it all the way down here at something I haven't sold it yet. All right? And I'm all the way up here. I'm all the way up here. Okay, give me a second. Let me open up the chart some more. I'm all the way up here, so I'm like, okay, let's see. Then she drops. I'm like, oh, here she goes again. And like, oh, man, she's right above the diversions. You know what? Let me set a stop loss, or let me get ready to sell it just in case she drops, so I could lock in my profit. And boom, she crosses over the blue signal again. So I'm like, yes, I'm excited. Okay. Then she keeps working her way up. Now I'm like, yes, I'm excited. And then right here, as you'll notice, there's a battle right here between the bears and the bulls. But this battle is going on the bulls side, above the diversion. So the bulls have the overhand. So I'm still holding it. Let them fight it out like beasts. I'm holding it, I'm holding it. Then she breaks above the blue signal again. We're still above the diversions. And she continues to go up. She continues to go up. She continues to go up. I'm excited, you guys, because we're way the fuck up here. Okay? Then she drops below the blue signal, as you can see right here. And I'm starting to panic a little bit because I'm way up here. And I'm starting to panic. And I'm getting ready. And I know she is holding it, team. She is holding it. She is holding it. And as soon as I notice that right here, she's getting too close to the diversions, you guys, I sell it. I lock in my profit, or I set a stop loss just in case. And the reason why my students sometimes, they tell me, why do you want to sell it? Don't you want to give it a little bit more time to get a little bit closer to the diversion just in case? And I tell them, well, look, we were way up here at level 5 at the MACD signal. She dropped. Now she is at level 1. So we dropped 4 levels. Okay, so that's a big drop at the MACD signal, but she is still holding it because she is above the diversion. So I tell them, look, that is one clue that tells me to lock it in. Another clue is now the MACD signal is below the blue signal, but there's a gap in between. You see that? There's a gap in between. And sometimes I don't like those gaps, you guys, because those gaps right there sometimes give the blue signal the overhand to drag the MACD signal down towards the diversions, below the diversions. So I definitely lock in my profit there. Okay, you guys, just by me looking at how it performs. So again, I bought it down here, you guys, and I sold it over here at this flow right here. Beautiful, beautiful. From $2 and some change all the way up to $7 and some change. I made about several 100% profit there, several hundred, about 2, 3, 3.5, about, yeah, about 3, about something like that. 100%, 300 to 250% profit that I made in that move. That cost me about 3 days, 4 days of a swing. So that's a good opportunity right there to buy it and know exactly how far to hold it. Now I'm going to give you another buying opportunity that I see at the chart as well, and that is on Friday. On Friday when she drops. Okay, then you watch it when she drops right here, right? Then you're watching it, and as you're watching, she crosses over the blue signal below the diversions. I still don't buy it. Okay, sometimes my students like to buy down here, but I don't, because sometimes there's reversals. Like right here, she battles to break over diversion, and she could just drop below blue signal and continue trending down. So I like to buy it when she's a little bit closer to the diversions, like right here. You see that? So but still below the diversion. So I buy it right here. Okay, and when I buy it right here, look at that. I capitalize on this whole trend. As soon as she breaks over the blue signal, as soon as she breaks over diversion, she starts. So again, I bought it right here at 6:30. Boom, 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 boom. I could sell it 5 minutes, 3 minutes before the market closes. I took about another $4 profit per share. Or if you have access to go to after hours trading, you'll notice the stock went up almost all the way up to $20. You could have made another 100%. 200% profit. So as you guys could see, those are two great buying opportunities, you guys. Okay, now I wanted to go over another indicator. When you see this indicators right here, see this indicator, as you can see, what I tell my students, the green triangle on the divergent means buy. The red triangle on the divergent means sell. Okay, you guys, and that's on the diversion. Now the red triangle on the RSI, where I'm at right now, on the RSI means overbought. The red triangle on the RSI means overbought. Okay, which is very important. Now the green triangle on the RSI right here means oversold. Okay, so oversold. So again, overbought on the RSI and oversold on the RSI. Okay, you guys, so that's very important. Okay, and now when you see this two come on, that one, the green triangle is on the diversion and the red triangle is on the RSI, that's an expansion triangle. That's an expansion indicator. That indicator lets you know to buy it now because the stock is going to be overbought. So buy it immediately as you see this indicator come on. Both triangles have to come on at the exact same time. That lets you know that a heavy level of volume is coming in. So as soon as you see these triangles, both of them, the green one on the diversion and the red one on the RSI, because remember the green one on the diversion means buy, and the red one on the RSI means overbought. So you buy it and look at that. Brrrah, brrrah. Okay, beautiful, beautiful. Now let me show you the other one. Let me show you the other one. And as you can see, look, we got another one right here. We got another one right here. See all these expansion triangles? So many expansion triangles. I want to look for one that has liquidation, liquidation, liquidation. Come on, liquidation, which is the opposite of the expansion. What's the stock that dropped a lot yesterday? Netflix, right? No, Facebook dropped a lot. Okay, let me see if I can find a liquidation indicator here. Perfect. No, oh, no, they're not lined up. No, 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 no. I'm looking for, see, an expansion. See that? An expansion right here. See that? Boom. Pop! Popped it all the way up. I'm looking for a liquidation indicator so I can show you guys what it is. I know this dropped too not so long ago. Come on, come on. But this is Facebook though. Let me see. Netflix. If I could find a liquidation indicator to show you guys real quick. Bingo. Nope. No, that's not it either. They have to come on at the same time, team. They have to come on at the same time. They have to. Give me a second. I'm looking. I'm trying to find it, the indicator. Give me a second. Let me see. What's the stock that dropped real bad? Let me see. I need something that dropped real bad. Bingo. Here we go. Okay, you see this? Now this one right here has the red triangle on the diversion. You see that? The other one, the expansion indicator, had the green triangle on the diversion. Now this one has the red one on the diversion, and it has a green one on the RSI. You see that? A green one on the RSI. So remember, the red one on the diversion means sold. It means sell, sell, sell. Okay? And the green one on the RSI means oversold. You see that? So when they both come on, lets you know the liquidation is over. The selling has ended. This has stopped dropping. So that's a very important indicator, because you always want to know, where is the drop? Has the drop ended? Is the drop going to continue? Has the selling ended already? And when you see the selling has ended already, all you have to do is wait for clear confirmation to buy the stock on a reversal going up. And as you can see, the stock, again, the level that it dropped the furthest was right here at $1.03. Then now she is above $1.03, because again, the selling has ended here. You see that? So when the selling has ended, you guys, I put attention to the MACD signal. As soon as I notice the reversal, the MACD signal crosses over the blue signal, I wait for it to create closer and closer to the diversion. And when I notice it's about time for it to crack over the diversion and the volume is about to come in, then I buy it and I capitalize on the whole reversal, on the whole uptrend. You see what I'm saying, you guys? So I hope you guys learned a lot today. This is a very important lesson. So I tell my students this, team. This is what I tell my students. Give me a second. This is what I tell my students right here, team. You could take away the chart. Honestly, I don't need those stupid candles. You could take away the chart. I don't need the chart at all. I tell my students, just give me the MACD signal, the blue signal, the diversions, the RSI, and the volume, and I'll become a successful, profitable trader. The ones that get it, don't question me. The ones that don't get it, do question me to tell me, why do you say that? And I tell them, because look, according to how the MACD signal trends through the diversion, she designs the chart. According to how the MACD signal trends through the diversion, she designs the chart. As you notice, she stayed above the diversion the whole time. The chart continued going up. The little hills, as you can see, the MACD signal, the chart, MACD signal dropped, chart dropped, MACD still went above diversion, chart continued going up. Okay, team? So I hope you guys understand that. All right, team? Awesome, team. Now let's see what questions you guys have. Let's see what questions you guys have, team. Fabio says, can you share your MACD signal settings and your RSI settings? Yes, I can. So basically, when you set up your settings, you got to make sure the MACD signal has 26,12, and it will give you the MACD signal, the blue signal, the diversions, and the triangles that basically indicators that let you know when to buy and when to sell. Okay, so that's how you set that up. It has to be MACD 26,12. Okay, you guys, what other questions you guys have for me at the moment, team? Any other questions you guys have for me at the moment, please let me know. The diversions. Okay, team, let me know if you guys have any other questions. Overextended. Yes, Johnny wants to know, what does it mean when a stock is overextended? So for example, let me give you this one right here, AWAX. Okay, when a stock is overextended, you guys, is when the MACD signal is way the fuck up here. You see that? When the MACD signal, there's levels to MACD signals. As you can see, you guys see right here, it says in the MACD signal, at the MACD, it says 0.03 negative. 0.58 positive, 0.72 positive. What I have come to learn from my mentors, the hardest levels to break out of MACD signal is level 2 and level 5. If it breaks level 2 and level 5, the stock will continue to go. supernova. It will continue to go. It will continue to go. Now, what Johnny's asking me, what do you mean by overextended? What I mean by overextended, sometimes students or members or day traders, they buy the stock up here. You see that? They buy the stock up here. And that's what it means by overextending it. See, the stock, the MACD signal is way overextended. And sometimes students buy up there. You don't want to buy when the MACD signal is overextended. You want to buy when the MACD signal is down here before it gets overextended. You see what I'm saying? You want to buy it down here. You see what I'm saying? Or in other charts, in other places, you want to buy it down here before she cracks over diversion. That's what I mean when the chart is overextended. Okay, now let me go back further. Okay, as you can see in the 1 month chart, max the SMA 10, she is way over the SMA 50. Okay, that's another identification that she is way overextended. Another confirmation, as you can see, the MACD signal right here is at level 10. I mean, at level 1 of the 1 month chart. Again, she is way overextended. So there's consolidation that's going to happen here soon. All right, let me see what else you guys have for me. Do you use time frames? What time frames do I use? Very good question. I use time frame, the 5-day chart the most. Okay, this is the way I use them. I use the 5-day chart first. Then I use the 1 month chart second. Then I use the 5-day chart first. Okay, then I use the 1-day chart second. Then I use the 1 month chart third. Okay, and that is in the world that I use them. This is why I use them like that. The 5-day chart, you guys, basically it's a 5-day, it's a 5-minute candle. It gives me a clear perspective, a clear confirmation of where the stock is heading. Okay, now the 1-day chart lets me know all the bullshit that is going on right now. And sometimes I don't care about the shit that's going on right now. I care about where it's going. So the 1-day chart gives me 1 minute. The 5-day chart gives me 5 minutes, which puts me ahead by 4, which is a good thing. I want to be ahead of the chart. Now the 1 month, I used it to identify if the stock is going to be able to qualify for me to be able to swing the stock from one day to another. That's what I use the 1 month chart for. Okay, I mean the 1 month chart for. So again, I use the 5-day, the 1 day, and the 1 month in that direction. Okay, any other questions, you guys? Any other questions? Again, if you guys have a lot, please give it a thumbs up. I will appreciate that. Let me know that you guys appreciate what I do for you guys. So again, you guys, this is very, very important. Again, I just you guys, you know, what every indicator means, what it does, and how it affects each other, and how the magazine is really how to introduce the diversion is nice to chart. So again, what I'm trying to tell you guys is very important. If you guys want to hear this information, it's called $1,000, you guys. So again, you guys, master the MACD signal. Mastering the MACD signal, you'll be able to identify what to buy, when to sell, how long to hold the stock. Okay, so you can see the 1 day chart, you guys. As you can see at the 1 day chart, you guys can see right here again a very good buying opportunity right here. The last hour before the market closes, right here. Look, you get closer, you see the MACD signal. It's below the blue signal now. MACD signal cross over the blue. That's why you get a buy signal. Okay, and then she starts to work her way up to the diversion. As soon as she cracks over diversions, you buy it. You buy it right here, and she starts to work her way up. Boom, 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 boom. You can continue to hold it because she's above the diversions, and as long as she stays above the diversions, you're holding it. As you notice, after hours, it continues to go up. Or if you didn't want to hold it after hours, you hold it. Again, buying it here to about almost $4 a share per profit. Okay. That's it, you guys. I'm sorry to let you guys. Yeah. Alright, guys. I'm going to let you guys go. I hope you guys got a lot of this lesson. I hope you guys understood a lot. Alright, you guys. And I will talk to you guys later. Alright, you guys. Talk to you guys later. Bye-bye.